Hello, welcome back. Today we are going to check a couple of diversified portfolio, which are the stocks which I'm going to discuss are like it's going to be like a diversified. It has a different sectors. It will help you to diversify your portfolio, and these are the long-term portfolios kind of stocks. And by the way, I'm not a SEBI registered advisor. The whatever stocks I'm going to discuss are just for education purpose only. If you want to invest, please ask your SEBI registered advisor. Let's get into the topic. And this is Sundar, and you are watching Mindful Finance. Okay, so let's get into that. And today, in the stocks list, which we are going to first look into is Renaissance Global Limited. So these are stocks which we are going to discuss, and these are diversified portfolio. So let's get into the details about Renaissance Global. Renaissance Global is they are more into silver and luxury based jewelry company, and they are into multiple locations. They are into Europe and North America, and they are into Middle East also. Their revenues are growing constantly, and mostly this company are doing their business through exports, and it is trying to expand their business through subsidiaries as well. So valuation wise, they are moderate, kind of a micro cap. It's not even a small cap also, after discussing the fundamentals. And the company's vision is mainly now to expand their business across globe, and they want to be the leading player in the silver jewelry. And as I mentioned, they are trying to expand in a different world, different geographic location, and especially they are trying to dominate in North America and Europe. And they want to start the business through or increase the revenue through export rather than focusing only on India. And checking about the pros and cons about this company. Pros are they are strong in this particular industry, and jewelry is something that its demand always it keeps growing. And the con wise, the problem is since it deals with commodity, there will be a fluctuation of commodity price. You already know that how the silver price and gold price are fluctuating. So that is the only concern about this company. So it follows the trend of silver, other commodity. So that is the only thing. So this, if you want to get into this one, it's purely for a long term, and this company will act as like a hedging for you. It's like a Titan other company, right? Titan is involved in different things. These guys are involved in silver only. Okay, so that is the only difference. But this company shows very good potential. So this company has a very good potential in the longer run. So let's get into the technical part of this company. So let's look at the technical part of Renaissance. This is a monthly view. You can see how this guy went, how it was started at 42 rupees and it went like anything. It looks like some kind of a pump and dump or something, but maybe between 2021 it started to go high and it went down like this. Okay, and now it is consolidating. If you see exactly from the low to high of this one, so it came down till this much of retracement. So it is kind of a 1 and 2 kind of a wave. So we can expect a third wave. So this will be our third wave. Or third wave, within the third wave, this is the first wave. If I look at this one, see this also retraced till here. Okay, so if I check for the longer term, okay, so this may go till this level, which is 219 rupees, which is the high. So which is having almost, so this is almost 64% from the current trend. Okay, but in the long run, it has a good potential. Okay, don't worry about that part. So just to check let's also check the fundamentals. So currently it is a market cap of 1252. The one which I said is a old one. So currently it has increased. The current price is around 130 rupees. And if you see the price to earning is 17. And book value is almost equal. Okay, book value wise it is good. So this kind of a business, if you look at the book value, it will be very good, because these are dealing with the commodities, and they need a more debt based, or they need to buy inventory based companies, right? So you need to book value wise it is good. Only concern is they are not providing any dividend. That is the only concern. Apart from that, PE wise it's little bit higher than its median PE, and profit and loss, if you see, consistently it is increasing. You can see consistently increasing. Operating profit, it is increasing. Last year it went down a bit. Okay, and this year we are expecting like 161, little bit again down, but it may we still don't know. This financial year has not yet ended, so it may go. You can see the operating profit margin also consistently is growing. And if I see the FII position, FII has reduced a bit and DAA also reduced. This is mainly public and the promoters are currently holding. War is getting started and Israel war is going on. So during this time, obviously this commodity price may fluctuate and it may go high. So there might be a kind of a increase in the commodity price. So that may affect this company because they need to procure and then they have to make jewelries out of that. So that might be a challenge over here. Okay, there might be a slight hiccups can happen. Okay, but overall, if you see the chart, it is looking good. Okay, this is a monthly view. If I go for a weekly view, so it is almost like a in RSI we checked earlier in one of the video. It is almost like above 6, and there's a chance the minimum at present it may go till here, which is so currently it has a chance to grow 26%. In overall, it has a chance to grow 64%. So you can check the comparison. Okay. So that way it has a good potential in a shorter term also and also in a long term also. So let's get into the next company. Next company is Timken India Limited. It is a very interesting manufacturing company. It's a very famous, it's a very big company, and they are a very old company as well as, and they are very good with their reputation, ethical. The main products and services about this company are they are into bearings, power transmission products, and lubricant system. So you can see they are into engineering bearings. They are into industrial motion products like gears, right? There are different brands they have within their company. These are the product lines. And they have a very strategic partnership within India, also across the globe. They are into collaboration with the automobile manufacturers, like a very big brands, industrial conglomerates like big industries. They haven't, because these companies work as a service and suppliers, so they haven't explicitly called out who are their partners or who are their customers. So we couldn't be able to find out, but basically they are into dealing with the big companies, and they're also helping the railway businesses in India as well as in Europe, and also they are into aerospace engineerings. The valuation wise, they are little bit high, which is 67.3 is their PE, and market cap is 19,000 crores. And see there, I'll show the details about their financial thing, but currently they're focusing towards innovation and IoT kind of products, even the bearings, all the whatever the products they are manufacturing, they are trying to get into the IoT based so that everything can be accessed remotely. And they are also focusing on the EV business, like EV based automobiles, wherever EV based engineering is happening. So they are trying to support those business. And talking about the pros and cons, as I mentioned, the pros wise, it is focusing on the futuristic growth because it's an engineering company. Their demand doesn't go down, and ethically they have created a relationship with their partners. Con wise, the main problem is their PE ratio and the PB ratio, which are a little bit higher, but considering the growth, we can give this kind of a price to this company. But still, we can wait and we don't need to bulk invest in this one. Slowly we can accumulate also, because this is not going to grow in overnight, right? It will take some time. And also another problem is the raw material cost, like the silver, the earlier company Renaiss. This also has a problem with raw material cost, because the raw material has to be you cannot you cannot always predict the price of the raw materials. It may fluctuate based on the economic conditions. That is a very big issue this company is having. If you check the financial statements and fundamentals of this company, this is the 27,000 market cap. Currently, it is trading around 3,648. Book value is just 321. So you can see it is 11 times of the book value, and price to earning also 68.9. But if you see the debt to equity 0.01, almost the company is debt free now. Okay, and sales growth also 11.8% is good, and the debt to equity, return on assets, you can see 14.1% is little bit low, but still it is good, not bad. Return on equity also is very good, 17.6%. Okay, and still the face value is 10. Anytime the stock company may split or something. Okay, whatever it is, let's see. And earnings per share is very good, 53. You see the PE, you can see slightly above the median PE of 68 or something. Okay, it is currently trading around 70 or 68, right? 60 is the median PE. Okay, and if you see the profit and loss statement, you can see how sales is growing and how the operating profit is growing, consistently growing, and the operating profit margin also consistently growing. It's very nice growth this company has shown. It is fantastic company. Okay, and if I see the FII, and FII has increased, you can see consistently they are increasing their position in this company. DAI also increased. So this is a very important point. This company has very good potential. Let's check the technical part of this one. Okay, so this is a weekly view. You can see how it is growing from, see, this was 2020, which is the COVID time, and it went like anything, and it has consolidated a lot. So this consolidation, actually, see, if you see, this consolidation was something like a flag. So obviously the flag and pole would be like this much is the one. So you can expect at least this much of growth from the flag and breakout from the flag. Okay, so that is, earlier I had dark mode. One of the viewer asked me to use lighter mode, so that is why my settings, everything is different. So I'm trying to I haven't changed the settings, so I adapted for a dark mode and it's a light mode. So that's one. So bear with my this one. But anyway, so if you see, this has a potential of 53% and then to 100%. So it has a very good potential, because even though PE is very high, let's see the. So if you see the RSI, it is going a bit down. So wait for it. This is weekly. If I go for a daily, wait. See, daily it's going below. So you need to wait. Okay. Still you have to wait for some time. It has to, RSI has to revise. Let's see the 1 hour chart. Okay. See, 1 hour it is reversing. So it may go till here, right? So you can see, okay, you can try here. You can check them. If you are confident, if you want to focus, check with the SEBI registered advisor. And if it matches your thing, this is right time. Okay. This looks like right time only. Okay, so if you see this one, look at the divergence. Okay, divergence. So let's see, it may go down a little bit, but still I would say, like, you can slowly start accumulating this one. You can slowly accumulate. If I look at the levels, it has retested 50%. It may come to, no, it's a smart, as per the smart money concept, so it may come here. Okay, I think that level is tested. So you can see that level is tested and it is going down. I think it's the right time. Yeah. Okay. Just check that out. So next company which we are going to look at is Blue Dart Express. I think everybody aware of Blue Dart Couriers. It's a big logistic in India. Everybody is aware. It's like a leader in this business, and they have their own position in India. In this business, they are like a premium service provider. So that way, they are the leading. I would say they are the leading service provider in India, and actually it's a subsidiary of DHL. DHL is a very global company. You all would have heard about that, and it's a subsidiary of DHL. So obviously you know how their quality would be, and they are the international service providers, and they are into first mile, middle mile, last mile, everything they take care of. What is meant by first mile, middle mile, and last mile? See, first mile is the raw material to manufacturing is called first mile, and from the manufacturing to warehouse is the middle mile, and from the warehouse to the end customer, this is called last mile. So they are into all these categories. They provide the freight forwarding, and they are all type of transports or logistic, air, water, everywhere they are positioned. And they are covering almost 56,400 plus locations, and more than 220 countries they are covering. And they are having a experience of almost 40 years. That's a concept. Any company, right? If it is holding beyond 3 decades, that means they are strong companies. They have already set their foot, and their growth will be phenomenal. Because most of the companies fail to survive beyond 30 years. If any company is surviving more than 30 years, it's a very good thing. As I mentioned, they are into courier and express services. Their sectors involve every type of business, like across various sectors: automotive, e-commerce, banking, pharmaceutical, consumer electronics, everything, wherever the logistic is required, they are there. And freight services through air, through ground, everywhere they are providing it. Okay. As I mentioned, warehouse and supply chain management also they have. So valuation wise, we'll check the financial data because this is the old data pulled from the annual report. There might be a change, but apart from that, they want to be the leading provider in the South Asia, basically. Okay, they are as subsidiary of DHL. So DHL takes care of other Europe and everything. They are the dominant player, and Blue Dot is trying to be a leader in Asia, South Asia, basically. Okay, and future growth as e-commerce is a growing business. They want to get into the all levels of e-commerce business, and also they want to focus on the sustainable part of it, because sustainability is every video I keep stressing this part. Any company is not following the sustainability, they will fail. So that way they are also getting into that mode, and they are also trying to get into the drone based deliveries. They're into innovating how to deliver product through drone. That is also their focus. So pros and cons wise, pros, their network is very big. They're very good in their domain. And con wise, currently it trades a little bit higher than the PE. We'll check in detail about that one. Let's see that. You see, the market cap is 19,000. Current price it's trading at 8,000 rupees, 8,300. PE is around 67. Book value is also is like 14 times it's trading. And return on assets, it's okay. It's not that great, but it's okay. 8.8. Okay. Debt to equity is almost less than 1. It's okay. And ROE 22.7. It's okay. It's not bad. ROCE also is okay, not bad. They are providing dividend as well, so that is a good sign. And PEG ratio is 2.56. This is also a very good sign. Okay. And if I show you the PE, average PE is 50, and it is trading little bit more than its median PE. Okay. And if you see the industry PE is 67. Okay. And see, only one company is shown here, right? Anyways, so they are not able to show multiple other logistic business over here. I don't know why. Screen is not showing, but anyway, so it looks like they are the monopoly, but it's not that. Anyway, so PE wise, it's trading a little bit higher than its own median PE. Okay, you see the sales growth in the quarterly results. It's growing. Operating profit increasing. Okay, let's go to the profit and loss. Sales is constantly increasing. See, operating profit little bit this year it's showing less, but still the financial year is going. But if you see, last year it was down a little bit because of some kind of investment they would have done. And if you see the operating profit margin, it is little bit reducing. That is the concern. That means they are trying to, this cost is increasing. Somewhere their cost is increasing, like people cost, like maybe the transport, fuel cost, whatever it is. That's a little bit of concern over their expenses. You see, expenses are constantly increasing. Right? But apart from that, their profit is growing. Okay, there is no, profit before tax is constantly growing. There is no concern. And the best part is if you see the FIA holding 5.4, a little bit reduced, but DAA has increased. That is a key point. Okay, DAA has increased. Let's see the technical part of it. Let's go with the monthly view first. You see, monthly view, this was a downturn happened from 2015 to 20. Okay, and then it recovered during the COVID time, and it is consolidating. As I mentioned, this is the flag and pole. Okay, but if you say A, B, this is the C wave. So this is A, this is B. We are currently in C wave, or A, B, C, and again this is going, so A, B, and this is a C wave we need to expect, or it may come down a little bit. How much it can come? Let's see. So already it retraced it here. Okay, it may come till here, or 7,000 rupees. It may come till 7,000 rupees, another 1,000 more rupees. If it falls, okay, that's the right time to buy this one or accumulate this one. Or you can buy slowly now. If from this current position also, if I see the current level, if it rises, there are chances that the long run, it has a potential to go till 25,000. Okay, so I'm talking about a very, 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 very long term. Okay, but short term, let's go to weekly view. It has a potential to go till, okay, another 77% from here, which is 17,000. So it can grow till here. If I use the breakout, from breakout I'm talking about. But the current level, if I see, it may go to 100%. Okay, just keep a tab on this one. So next one we are going to talk about is GFL Limited. So GFL Limited is a part of, earlier it used to be part of Inox. Okay, and from Inox it came out, and they are now, it's acting like a holding company, like a Bajaj holding. They are also like a holding company of Inox. So like 49% of share is held by GFL. So most of their profit comes through Inox side, like which is a media side. And so they have this chemical industries. So that chemical industry came out from the Inox, and That is what GFL is. Okay. So, but still they're holding the Inox shares. So that way they're part of Inox. The revenue is part of their Inox also. So that is where the main thing comes. Okay. Valuation wise, this is currently it's kind of a what is it like fluctuating, but it's okay. Okay, it's not bad one. The vision and growth are, they just to make sure that the shareholders has to feel comfortable. So they are trying to have a strategic role where to invest and how to bring a good revenue for the shareholders. That is the main thing their goal is, because it's like a holding company. Okay, and the other thing is chemical sector is a very small sector. And pros and cons wise, if you see, media industry is facing a lot of problem because OTT and other things are coming up. But PVR is, PVR is almost okay. Why I'm saying PVR is PVR acquired Inox. Okay, so PVR business is, currently it is going good, and their share also is going. Instead of investing in PVR, you can invest in this one, because this is the also a holding company. So whatever the rise happens in PVR, it also get benefited out of that. Parallelly, it has its own business, chemical business also. You can get benefited from their business. So let's see GFL technical part. It's almost like a micro cap. 964 crore is a market value. Current price is trading less than book value. See, this is the problem here. Okay, book value is showing 236. Its current price is 87.7. It's very little bit tricky. The reason is the more revenue is coming from Inox. So you understand the book value of Inox, right? So that is why there's a difference over here. Okay, that Inox is coming over here. The book value of Inox is coming here. So that is why it is showing like, but still, so compared to that, it is trading below the book value, right? So stock P is not yet shown here because it's more of a holding company, and it's recently like evolving the business. So it may take some time to get the PE. Okay, so but overall, if you see, it is trading. Okay, PE wise we cannot find out now. Okay, so you can see it is having a very good free cash flow, and if you see the result, profit and loss, sales wise, see it is very bad sales wise. The sales dip is, they have changed their vision and the business model, right? So now they are like a investors, they are holding company, and they are also like taking care of some kind of a mutual fund management. So their focus completely has changed. So that's why you don't see much of like operating expenses or anything, and the sales also it's not showing, because completely now the business is moved to PVR. So they are just a holding company. That is why there is a dip in sales, you can see. Okay. Apart from that, if you see, the profit is right now it's negative. Okay, so it may take some time to settle about in this business to get the complete clarity, but overall it doesn't sound like a bad company or anything. If you see the shareholder pattern, FII has little bit reduced, DAS like they have also reduced last year very little bit, not much. Okay, little bit they have reduced, but almost it's good that FII and DA are holding this one. Let's see the technical part of this one. Yeah, so let's see the GFL one. You see, it was very much like December 14 till now, it was very much fluctuated, and now it is trying to settle, but still there is a fluctuation because the business is kind of turbulent over there. But the long run, if you see, it has a very good potential because it follows the PVR, and the shorter duration, you can see it has a potential to give you almost 36% from the current zone. Okay, it is in a sideways, you can clearly see. So it is going to break out, for sure it will break out, then it will give a good run. The next company which we are going to talk about is Dr. Lalpath Labs. By the name itself, company brand itself, you can understand that they are into labs, diagnostic labs. They are specialized in diagnostic only. Okay, nothing like other hospital centers like Narayana Nethralaya is doing good, but their business is diversified into different things. But this particular company is focused only on specialized in lab techniques, and the hardware, everything is centric to labs and testings. And they started almost 1949, and they are into all type of lab activities like diagnostic tests, pathology, radiology, genetic testing, everything. And their chain is like across all part of India, and they are serving millions of people. They are very famous for their state-of-the-art labs. Their labs are like very sophisticated and very hi-fi labs, and the professionals are very skilled because the instruments which they handle are very high-tech. So they need a very skilled professional. and their customer centric or customer experience is very good. Okay, the feedbacks got from the customers are very good, so that it clearly shows that how they are customer centric. So growth wise, if you see, Lalpath is going significantly, like 10.4% year over year, and EBITDA margin also is very good, and they constantly expanding their network. That is a very good sign, because health is going to be the next next booming industry. Always health is the booming industry, but going forward, the way inflation is happening, the cost is going to be skyrocketed. And you all know, right, how the US health industries are earning money, right? That way, health industry is going to be a front runner in that one. And for that, labs are going to play a very crucial role, right? And they're also getting into the AI space, because the diagnostic can be automated, and getting the results could be very much explained properly. Reports can be read by the customers very easily, right? So that kind of innovative work they are doing. But because identifying any kind of a pattern is very important when you are doing it, running through a lab test or radiology, whatever it is, right? So incorporating AI is going to increase their efficiency. So their main vision is, as like any company, they want to be the leader in this specific industries, specific space. That is already they have achieved that part. Okay, and future growth, they are right now in a tier 1 and 2 cities. Now they are focusing more to tier 3 and 4 as well. They have already started that one. The pros and cons. Pros wise, we discussed a lot of things. Con wise, there are labs, like competitive labs are there. The one specific thing is, India is in this, like lab wise, if you take, there are a lot of unorganized sector or unorganized companies are there for this test, lab test and diagnostic kind of a thing, right? So getting them to one system is very difficult. So their revenues are getting diluted because of a lot of unorganized centers. So that is the only con, I would say. And also, as usual, regulatory things from the government or anything may affect their business, but that is not a big deal at all. So as I mentioned, the competitions are the one, unorganized labs are there. The regulatory changes will be always there. Another thing is about the inflation part, and people need to be afford to pay for the service. That is why they are dealing in the tier 1 and tier 2 cities, and now they are trying to get into tier 3 and 4, so that there might be their margin may get affected if they get into the tier 3 and 4. And as usual, commodity price, the medicine, the raw material price, the whatever it is, right? That might be another. Any upgradation has to be done for the technical tools and things that will also has to be done. So the investment wise, there will be more needs to be. It's not like one time investor means it may go for a lifelong. It's not that. So they have to keep on upgrading the system as well. So let's see the fundamentals. So it's almost, this market cap is very good, like 29,000 crores there. Current price is around 3,400. Book value is 222. So this is what the main thing is, like book value is almost like 15 times, and PE also is almost 76.6. This is a growth industry, so it's okay to pay this much of amount. Okay, debt is almost like debt free, like not big much debt over here, because the free cash flow itself like 2,000 crores they are having it, so it's easy for them to close their loans and other stuff. And earnings per share is very good, 45.7, and return on asset also is okay, not bad. But ROC is very good, 25.2. Okay, and as I mentioned, PE wise, if you see, it is almost like closer to its median PE, but so PE wise it's decent, not highly overvalued. But compared to the industry PE, as I mentioned, right? So if you see, Narayana Hrudayalaya is doing good. Narayana is just 30, but the problem is Narayana Hrudayalaya is into different thing. They are not just labs. Okay, but Dr. Lalpath is focus only on the labs. Okay, if you see the sales quarterly, it was going 23, it was high, but it is slightly increasing, not drastically increasing, but it is increasing. But if you see the operating profit margin, it is increasing. Last year it was less, but it is constantly increasing. You can see OPM is increasing. That is a very good sign. In this industry, OPM is increasing is very good. Overall, if you see the sales, it is keep on increasing. Operating profit is increasing. Margin also increasing. You can see that. Okay, and another good thing is about the shareholding FIIs. FIIs recently reduced their stake, but DIA has increased the stake. This is the important one. And see, the government also holding this one, right? FIAs, you see, there is a big companies like Singapore-based companies are invested in this one. West Bridge Crossover Fund, all big companies have invested in this one. So that way, this is a very reputed company. Let's see the technical part of this one. This is a monthly view. It went from 20. This went like anything. So this was the right time. Okay, I also missed this one. Okay, that time I didn't focus much on that because this was falling like anything. I thought I need to wait, but I missed it. You see, it exactly touched here and it right. Okay, anyway, so this is a good sign. This stock will, as I mentioned, this is going to go like anything. It has a very good potential. This is going to, what is it like? I will check this one. So it has a potential to reach this level, which is 89% from this level. So it has a very good potential. If you see, this is the breakout zone now. This was the breakout zone. Right? This was the first breakout zone. It broke and it is going to this target. First, it will try to target this level, which is from here 25%. So it will focus this part first, and then only it will go to the next target. So you can focus for this one also. The next one which we are going to check is Rattan India Enterprises Limited. So this is also very very interesting company. They are into different diversified portfolio like EV, solar thing, drones, and fintech. Mainly they are into fintech and e-commerce. Okay, so that is the main thing. But overall, they are trying to focus in a diversified, futuristic aspect. Okay, they are also into getting into EV, electrical vehicles sectors, like providing softwares for that. So the main core thing is into e-commerce. Okay, and the fintech. So EV and drones they are currently focusing more on that futuristic aspect. So they are growing. So basically, this seems to be like a growth industry. So valuation currently it's showing very, very, very low. Okay. And currently it is trading around 73 rupees. And the vision of this company is mainly to get into the new age businesses and into renewable energy businesses. And future growth is obviously everybody knows into renewable energy business, and they are focusing mainly on that. Pro-wise, they are focusing on the growth side of our macroeconomics, and con side, their debt level is little bit high. See, whichever company is focusing on this renewable energy or into growth, their debt level will be little bit high. I'll show the details of the things. Let me show Rattan India. You see, it's a 10,000. It's not a. It's a good market cap. See, book value is 6. Current price is 73. So that is the very, very, very high, which is 12 times its trading. Price to earning is only 8.8. It's very low. P is very low. Debt is also more than 1.41. As I mentioned, it's into growth sector, and so there will be a little bit high in their debt. Okay. Another problem is they are not doing any dividend payout because still the company is in a growth phase. That is another thing. So earnings per share is 7.95. It's not high because we need to wait for this company. Okay. This is not like one time within an overnight it is going to do. So PE wise, you see it's negative P. That means the profit wise it's still not at to that point. I'll show that one. If you see, sales was growing, expenses also growing. That's okay. Operating profit, see, it was in negative. See, it was in negative, and again it became positive, and again it is in negative. So this is what the concern about this company, because the operating profit is a little bit volatile. But we need to wait about this one. But as you know about all other like solar based or sustainable energy based company, everybody has a lot of debt or investment wise they have to spend a lot of infra wise they have to spend a lot of money. So that wise this also is facing such a problem over there. So we need to wait for it. But overall the company is a good company. Okay, let's see the operating profit in yearly wise. Year wise it is doing good. It was in loss, but now it is recovering. So slowly it is picking up. So which is very, very, very important. See, it was a negative OPM. Now it is 1%. This is a multi-bagger, ultimate multi-bagger company. This will be going to be our multi-bagger. Just focus on this. Write down in the diary or anything. Next year we'll check about this company. But anyway, as I mentioned, we are going to build a link, an Excel sheet. So where I'm going to put this stock as per the current price, and let's see in 1 year what is happening. Okay, that we will do. Okay. And if I see the FIIs are increasing, DA also increasing. Note this point. This is a very interesting one and important company to focus. So let's see the technical part of this company. Okay, so this is the technical chart. It's a monthly one. Okay, so how this went during the month July 21. Okay, from July 21, this is the breakout. It has given a breakout during November 23 and it is again consolidating over here. Okay, this is consolidating here. Okay. This may come down to 50 also. I'm not sure. Okay, a shorter span of time, it may come to this also, but I'm not sure. Okay, I feel since the company has started to show the profit and the retracement also, almost it tried to touch the 61% level. Okay, and then it reversed. So A, B, C is done. Now A, B, now then the short span of time you may expect it may go to 104 for now. That's a chance. So this is the pattern, right? And when this pattern is broken, it may go to another next level would be around 130 rupees. So it has a very good potential. If it goes to even from this level, it is 80%. There's a very good chance it may go till here, which is 121%. So track this company. It's a very interesting and important company. It's a futuristic one. Okay, so overall we have checked Renaiss Global, where they are into silver. So this is a hedging company. Timken is a manufacturing company, purely into automobile and other things. Blue Dot is a logistic company. GFL is entertainment holding company. Lalpath Lab is into medical industry. Rattan India into technology company and renewable energy. So we have a diversified portfolio over here. This is a good way to start your portfolio. Maybe you can do a paper trading. Just have this in your list and start tracking it. Whenever you feel comfortable, check your SEBI registered advisor and you can start your investment.